Hi everyone, this is Mel. She's associated with the CPA. Mel, if you could just tell us a bit about yourself.
Sure, thank you. Hi, good morning everyone. My name is Mel Georgiou. I'm currently finance manager of a private hospital on the Gold Coast. Prior to that, I've had 13 years experience with a media organisation, multinational media organisation. Before that, I started on the factory floor. Done my apprenticeship in accounting, done AP, AR, payroll. I've been in, got my hands dirty, carried bumper bars around, random comment. So that's me. So we'll start out with just a little presentation from myself, and then we'll let Bryce fire away with some questions. So the way I always think of a budget is your promise. It's what you promise to your senior management that as a business, what you're going to deliver as your results. Now, being part of a bigger corporate group, that's extremely important because there's a number of individual businesses that are all coming together to create one big profit and loss statement. So we're just one cog in that part. So really critical things to consider with budgeting is your external environment. So what's going on in politics, what's going on in the economy, the industry, so the industry you're in, what are your competitors doing? So we've recently faced that in the hospital group with the Gold Coast public hospital opening up, and of course that changes the mix for the private field because they've got all single rooms in this fancy new hospital, so it has provided some challenges. And also your internal environment, so what are your trends, what happens in your cycles, what's your strategy, what are your drivers? So the really important thing with budgeting is get your forecast right first and foremost. So for example, and the publishing company I was in April each year is when we'd have to lodge the budgets. But of course, the year hasn't finished yet. You've still got May, June, and you're actually starting your process in February. So you're presenting in April, but you're starting looking at it in February. So really only 6-7 months of the year have gone, and one of those months is Christmas, and that typically is a dip in a lot of businesses, unless you're retail, of course. So all these factors to take into account, and you haven't even finished the year, so you've got to get your forecast right first and foremost. Setting goals, realistic goals, stretch goals. Can't be too conservative. The big bosses won't let you be too conservative, I guarantee you that part. And obviously get buy-in. Jam mentioned before that there's everyone in the business is affected by the budget, so everyone has to buy into the process, either the result or they have to accept it and be accountable for it. So for example, in publishing, $100,000 increase in revenue can sound quite scary to the ad director, and the ad director thinks, what does that mean? That's $100,000, how am I going to do that? As finance people, we can break that down and we say, okay, that's only 7,000 centimetres, that's only 26 pages all up. So 26 pages for the year, that's only an extra half a page a week you have to sell in advertising. So that's where we add value in the budgeting process, is break it down to the basic common denominator.
If you could please tell us, Mel, how the budget process has worked in the businesses you have had experience with, such as is the approach from the top down, or lower level managers or employees involved?
Yeah, great question. The process, so if I rewind pre-2008, so 2008 was when the last GFC hit, and I think that changed the way people do business in a big way. So pre-2008, I was in publishing, and it was very, very profitable, very successful business. And being part of a global media group, because we were so successful, we were allowed to function almost as a silo, as our own federate state. So we could set our own budgets, we were pretty much left alone, had to go and present to the corporate group, answer some pretty straightforward questions. That was about it. So that was very much bottom up. Post GFC, the world changed, and particularly in media with the evolution of online and digital technology. It really changed the face of print media. So the business and the decision making was centralised. So head office had a much bigger role to play. And so head office said, okay, in February each year, we think that your advertising revenue in the real estate pillar will generate an additional 3%. We think your editorial costs are going to increase by only 2%. So that was the top-down approach. Then what we did with that information is go and build it from the bottom up. So we'd then say, okay, what does 3% extra in real estate look like in terms of how many ads do we need to get to generate that additional revenue? So we'd go down to every single week, so 52 weeks of the year, massive spreadsheets. So 52 weeks by a gazillion rows of information, add it all up, pull it all together, crunch the numbers, and then see how close do you get to what the top down has said what your result should be versus what we think it should be, and then engage in robust discussion, shall we say, when you take it to present. And health is somewhat similar. The private health industry is similar, where you're given guidance on major expenses. So major expense in health is medical surgical supplies as well as your salaries and wages. The wages is defined by an EBA, so that's pretty easy. You know what your enterprise bargain agreement percentage increase is, so you can apply that across. Head office tell you your med surge is either going to increase or decrease. Okay, you factor that in. And then you need to look at your doctors. So what are your doctors doing? Are they migrating to the new public hospital because it's nice and shiny? Is your nearest private competitor building capacity? Are they building more theatres? Are they likely to take away some of your doctors and utilise them in their space? So in health industry, same theory, you budget down to the basic common denominator, which is what's your driver? The driver is the number of operations that you're going to do. So you bring it down to that driver. So it's a mix, it's a combination of the two.